All right, good evening or good afternoon. I'm gonna do an update review for today. Today is Monday, August the 7th, 2023. It's the first trading day of the week. This week is huge because we have a CPI number come out on Thursday, right? Is the economic calendar, so we see it on Thursday. Last month on July it's come out on Wednesday, but this month it's come out Thursday. So if we're going to want to engage, then let's see how it react. I mean, we can engage late in the week, Friday. We can engage them, use the strategy, a second day player strategy. The second day player strategy, I think is I read the book from Mike. His name is Mike Ben something. Let me grab the book real quick. Yeah, his name is Mike Bella Fire. I think he's the co-founder of the S&P Capital, a trading firm in New York. So the idea behind the second day strategy is that you know that after the big impact news high impact news release, you see how the price action move as you notice the key level. Then on the second day, you have some framework to work with those levels, then you can engage, right? So that's the basic idea right there, and that strategy makes sense, right? Because the market is source, it hands, so we can we either go with the trend, or we know they're going to continue the trend, or going to be a retracement, reversal. So basic idea like that. So let's see for today, what do we have? Here's the 1 minute time frame. You can see that is just the only before 10 o'clock. You see it take a lot of buy side liquidity out, right? You see buy side liquidity. After it check this and it done. In the last, yeah, that's the last buy side liquidity taken. After last, you see it's a nice moving up right there. But if you look carefully, this can give you some idea right here, right? 1, 2, 3 right there. That's 3 drive right there, and then it reverse. And you can see right here, right? Fellow gap right here, and I mean auto block, and huge fellow gap right there. You have one fellow gap right here, and then you have one fellow gap here right here. It's auto block right here, fellow gap retest, and boom, you have right there. That's one of the setup that you can check out. But the thing that I want to point out real quick right here. So you look at this move up. What do you have in mind, right? What I have in mind is that this is a high resistance liquidity run. It's very toppy, right? It's toppy in the sense that it take buy sell liquidity, come back to sell sell liquidity, take buy sell liquidity, come back to sell sell liquidity, come back to sell liquidity, take buy sell liquidity, or make equal low right here, You see that? Just a little bit. No, it's take by category. And then right here, it felt the swing low, and it come back here. It take the intermediate swing low, but not the long term. Right here, then it move it up. So you can categorize this or annotation. The move up today is like the high resistance, liquidity run. So if we want to have a engage in a low resistance liquidity run. But anyhow, if we want to engage in a quick, trade with a very precise and early targets, then we have plenty opportunity for today's. But like I say before, we don't engage in Monday. We only engage on Thursday and Friday. And we only engage in one trade per week. That's it. That's our rule for now. So let's see. Actually, you see the level that we draw out when we look at the 1 hour time frame. It's respect that level. You look at that. It just the whole time it stay in that level. So at the last minute, it break through level and retest go up. But however, let's see, tomorrow is still at this level or something happened. The reason why we draw this level is the fair value gap. Fair value gap between a bearish breaker and fair value gap right there. Let's look at the 1 hour time frame. We can see that. Okay, here's our 1 hour time frame, and this morning we draw right there. So basically here's the fair value gap right there, and here the bearish breaker. Let's put annotation right here so we know what we are talking about. So it's a bearish breaker, right? 1 hour time frame, and it's an open right now. It's close level. You see we put the box right there so we know the range right there. So it's break through there and it close above there, so two of them. So it's maybe decent that it will continue to go up, because you see the huge fair gap right here. Let's see, because it's close above this guy, then you see right there, it close above and it fill in the fair value gap. Ooh, nice. Then to see how it's gonna react to this this bearish order block tomorrow. Let's see around this level. That's the thing we want to watch. So tomorrow we want to watch this level. We want to watch this level right here. Gonna be a beautiful level that we want to watch. Okay, let's make it a little bit darker on the 1 hour time frame. Okay, so we good right there. Let's remove some of this for now. Okay, then we want to see on the 4 hour time frame how the Monday, you see the lunch hour, how it's open, and close. Okay, let's see what's 4 hour time frame. Man, this huge candle take price liquidity. I think I'm gonna set up to go real low. That's my guess right there. So basically, this one is up close, and this one is up close. Last week, which one is down close, and this one is up close. I set up for the bearish order block, further gap retest, and came down the whole week. But let's see if this is gonna be retracement so far, right? Is this retracement gonna turn reversal to go up, or it's just retracement and continue the downtrend? Let's see. Then we're really looking for this order block. This. Yeah, we need to watch. We did throw this level, so let's see how we break it up here. We're gonna hit this, and boom, went down. Take the buy side, sell side liquidity here. See, yeah. Let's see. So let's draw out a scenario, right? Let's say we anticipate tomorrow up here, right? And then come down, but I doubt it. I think it's, because this downmove is huge. I don't think it's gonna be take out the sell side liquidity here without this. So up here, okay, how about this? Let's see, maybe make it more complicated right here. Boom, and then come down here, retest, come down here. So basically take out this one, and then retest or somehow around here, and then boom, continue to go, right? I believe we continue to go. And then maybe, I don't know, right here. We're gonna retest this error rate. Let's say retest error. And this one is too huge. Or maybe around here, right? And then boom, it went down. Oh no, maybe go down all the way here, take my separate. That's one of scenario that maybe happen, but this week. Let's see. I saw the news that the Dow Jones dropped 200 points, but however, look at it, the SPY is rally 0.87%, $3, $4 move right there. That's decent right there. Because let's see the volume, and if you look at the 5 minutes time frame, you see they have a huge volume. So who is buying? It look like every time is retracement, someone going and buy, retracement, someone going buy, retracement going buy. Right there. And the volume right here is 100. Wow, it's the first time for a while we see it reach 100,000 share right there. And we haven't seen this volume for a while. We see the 100. Yeah, we haven't seen this for a while. That's one of the big volume and reason for daily. And as you remember, this morning we checked a screenshot of the VIX treatment right here. So this morning we check. Oh, come on. Why we do that? Oh, I believe that I checked the screenshot of this. How so? Somehow I didn't save the... but anyway, I say the number. Well, let's look at the VIX again. Yeah, look funny. I look at this one and I saw, yeah, that means someone going and buy, because when they see this is, yeah, this morning is 10 something. It's cut below 108. So I got the number this morning right here. Yeah, 108. So that means someone used that number to go and buy right there. Let me just a second. Alright, so I saw this number low, so I believe someone gonna go in and buy. That's the reason why you have a huge volume right there, 100,000, 100 million share. Yeah, but this morning I did not take the screenshot. You see, it's still, the timestamp is 03. Which is last week, which is not right. I need to update this. Anyway, that's what I'm trying to say right there. This morning is about 10 something. Because I try to understand why people go in and buy and how it related to this VIX, 3 months ahead. Let's look at the VIX now. It dropped, right? But it's still way stay above the 15 right now. So it's open at 16.9 and drop and close. at 15. So 1619 and then 1577. Let's look at the fix and skew. So you have 4854. Alright. Okay, now look at the 5-minute time frame to see if the DR model, the DR model beautiful today. You see that? We have so-called retirement setup right there. You have a DR right here, DR high, DR low, imply, and then it come back and retest them. And you have auto block, perfect, only one favorable gap right there. Auto block, favorable gap, retest, that the ICT concept, and then it fit in the DR model right here, retirement right at 1030 right there. If at 1030 you have a retest here, fit in the DR model, then you know they're going to go long, and you're gonna get out when it reach to one standard deviation right there. Wow, that's the beautiful trade for the DR model blend with ICT concept right there. With the London rate, London high was taken and then retest right there. London low taken first, London high taken later, and then come back retest in the mid of London right there. Yeah, you see the huge follow up right here. You have to pay attention to that one. They're gonna reset again. All right, let's log this into our database. All right, so this perfect into the setup. So what we call this model again, it's gonna be trend continuation, right? Order block. So very good. Retest, and also is the DR model, right? DR model is, confirm either this one is lower or higher right. So in this case, we are go with this one, the lower model, low of the day, because rejection, it fell at 11:30. So we going long right here. It's gonna be long setup. Remember the time is perfect for a DR retirement, setup entry right there. And the target is 1.2 standard deviation for the DR. Hold on, what happened right here? Yep. By the way, it make our ruling engagement is the sell week were taken, right? You have so many sell weeks, right? You have London low taken, right? And here the short position, right? You short after the buy side, but this move is what? It right into the order block. So is there any way they're gonna be a continue to go down? Why you take the long right here with this setup right? Order block fellow gap retest is only fellow gap we have in this time frame, so it's very reliable right there. Okay, I see. We have a cell liquidation, and right here is cell liquidity taken right there. So we have a loss of cell liquidation. Let's put it on annotation, okay? Cell liquidity taken, cell liquidity taken, and cell liquidity taken. So we can engage long. Yep, I think that's good for now. Yep, that's with the trader we're gonna take. Retest. Long setup. The entry is 11, 30. That's for the DR model right there, right? Now take a look at the two practice trade we took earlier and see what we learned. A two practice trade. Okay, now we have an answer for this, right? It's a up close. You know, last week is a down close, and then the candle after that, which is at 13 hour, is go up. Set up for Tuesday is the high of the week. But let's see how this week gonna play out. All right. For this, we think we take the entry at 9:54 or something. Yeah, 94 right there. And later on, we learned that this entry is too early, right? Then we come with the second entry when we let it clear. Now we say it's order block retest, but this order block right here is not reliable, right? Then that's the reason we enter trade right there. So we do not engage long before 10. So that's our note right here. So it's practice trade, but it's a lot trade. The lesson we learn is very wonderful. You see here the lesson we learned. Look at that. So we see the setup right here, right? Forming with a short setup. So let this setup play out. Let the sell side liquidity taken, and then we can engage long right here. If we engage right here, it's too early right here. The long entry is too early. This is a setup we see that, okay, order block, favorable gap, retest, we turn on the test and go up. But that's not how the market is booking, right? You have a setup right here, buy select liquidity taken, and this is a bullish, bearish breaker. Right here, short up, the entry is right here, and the target. So let's just clear out the target right here for a short position, which is excess liquidity. Then we can go and enter them. Now we have a beautiful setup right there. So we learn from our early entry right there. Just a long entry is too early. This one is straight too early. Wait for the short setup to clear buy side liquidity. Alright, that's the first trade. We check, right? We lost that trade and we learned lesson. Here the second trade we check how much we lose on that trade. Okay, so basically the long setup. Oh, okay, so the order block right here, refer up, retest. Then our target gonna be the buy side liquidity. Hit the one. You see the note right here. Hit the buy side at 125. 1, 2, 3, reach the goal, right? So you reach 40 cents, you gain $1.30. So the order block is formed at 8:15. Right here, 8:15. That's amazing, really. The only paragraph. So this captured this move, and there in the retracement, go back to retest this order block that can engage along entry. So basically we have practice 3 trades today, right? First trade also long, but a little bit too early, because we had to learn that let the short setup play out, take the sell side so we can engage. So this is the winning trade first, and this is the another favorable retest setup with this entry at 10:30. We have about 12 more minutes, so let's see what we want to cover. Yep. Now look at the smart money technique diversion between QQQ and SPY. The QQQ, this one is the up close candle while the SPY is down close. So I don't know if the market tries to tell us something about that. So let's see. Let's see that if there's a bearish ripple going down or they might going up. But it set a huge range right here. Let's see how market behavior on this range. But the good onward hype, probably that you gonna engage when it retests this one for long. That's how you engage along right there. Alright, look at the, I think we go a little bit over time. Let's look at the weekly to see how it play out. Here's the weekly right there. Wow, this inside candle, right? At least it's open and close above this this close. I really want to see what is the middle range of the candle. Then we have some idea. You can do like this, right? You can have a roughly the range right there. So 452 tomorrow we watch 452 to see if break above the mid range of this candle. Right? Yeah, let's see. I'll leave it there for now. Break to that range. The weekly right there. But anyway, I gotta go, and thank you. Talk to you later. Bye for now.